Hey there, Striverz. Did you know that options trading can be a powerful tool for making money in the stock market? But wait, before you jump in, let's make sure you know the ropes. In today's video, we'll dive into the world of options trading and give you the lowdown on how to trade options like a pro. But first, if you're serious about growing your wealth and financial knowledge, hit that like button, subscribe to Striverz Money, and don't forget to turn on notifications so you never miss a video. Number 1. What are options? Alright, let's start with the basics. In a nutshell, options are contracts that give you the right but not the obligation to buy or sell an underlying asset at a specific price, known as the strike price, before a certain date, called the expiration date. There are two types of options: call options and put options. A call option gives you the right to buy the asset, while a put option gives you the right to sell it. Simple enough, right? 2. Why trade options? Now, you might be wondering, why should I trade options when I can just buy or sell stocks? Great question. There are a few reasons why options can be an attractive trading tool. First, options can provide leverage. This means you can control a larger position in a stock for a relatively small upfront investment, known as an option premium. This can lead to significant potential profits, but also higher risks, so be careful. Second, options can be used for hedging. For example, if you own a stock and want to protect yourself against potential losses, you can buy a put option as an insurance policy. And finally, options can be a great way to generate income. By selling options, you can collect premium payments from other traders, which can be a nice addition to your cash flow. Number 3. The basics of options trading. Now that we've covered the basics, let's get down to the nitty-gritty of options trading. Here are some essential concepts and terms you'll need to know. Options contracts represent 100 shares of the underlying stock. So, when you buy or sell an option, you're actually controlling 100 shares of the stock. The option premium is the price you pay or receive when buying or selling an option. It's determined by factors like stock price, strike price, time until expiration, and implied volatility. In the money, ITM options have an intrinsic value, meaning there's a real benefit to exercising the option. Out of the money, OTM options have no intrinsic value. And at the money, ATM options are right on the edge. 4. Trading strategies. Alright, time for the fun part, trading strategies. Here are some common strategies you can use when trading options. Covered call. This is a popular income-generating strategy where you own the underlying stock and sell call options against it. If the stock price stays below the strike price, you keep the premium and the stock. If it rises above, you might have to sell your shares. But hey, you still made a profit. Cash secured put. In this strategy, you sell a put option and keep enough cash in your account to buy the stock if it gets assigned to you. This is a great way to potentially buy stock at a lower price while collecting premium income. Vertical spreads. A vertical spread involves buying and selling options with the same expiration date but different strike prices. There are two types: a bull call spread, buying a lower strike call and selling a higher strike call, and a bear put spread, buying a higher strike put and selling a lower strike put. These strategies can help you profit from a directional move in the stock while limiting your risk. Iron condor. This is a more advanced strategy that involves selling an OTM call, buying a further OTM call, selling an OTM put, and buying a further OTM put. This creates a profit range, and if the stock stays within that range, you collect the premium. Great for range-bound stocks. Number 5. Tips and tricks. Before we wrap up, here are a few tips and tricks to help you succeed in options trading. Start small and be patient. Options trading can be complex, so take your time to learn the ropes and don't risk too much money up front. Choose liquid options with tight bid-ask spreads. This will make it easier to enter and exit trades at favorable prices. Always have a plan, know your entry and exit points, and manage your risk accordingly. Keep an eye on implied volatility. This can have a significant impact on option prices, so it's important to factor it into your trading decisions. Now you know the basics of options trading and some strategies to get you started. Remember, options can be a powerful tool for making money, but they also come with risks. So study up, practice, and always manage your risk. Now it's your time to take action, and check out the related links in the description. And make sure you watch our other videos on making money and achieving financial freedom. Thanks for watching, and keep striving.